Ladies and gentlemen, one of the main reasons why the stock market in US has been going higher and higher and higher is because of the artificial intelligence growth that's amazing. But we all recognize that there is a bubble that's now growing bigger and bigger and bigger, and everybody is now saying you're burst. Is it going to be today, tomorrow, 1 year later? Today, we'll attempt to analyze some of this and what we should do, and let's watch on, shall we? So today, the focus will be about the AI bubble. Now, in 2001, there was one big bubble that burst called the dot-com bubble. And that bubble burst caused a massive, massive drop. The NASDAQ fell by 80 over percent. So if the AI bubble were to burst, what will happen to S&P 500 and NASDAQ? Today it's important that we watch on. As usual, these are my disclaimers. This content is for education and entertainment, not financial advice. Remember, hit subscribe. This development is now happening fast and rapidly. Let's watch on, shall we? So yesterday, the stock market suddenly have a tumble for no reason, but it's largely because there is an AI little hiccup. So I think it's important for me to cover that. The S&P 500 went down by 0.6%, not severe. The NASDAQ went down by 1.4%. And I think it's important for us to cover the reason why. So there's now a AI bubble fear that the crash will happen big time. And if that were to happen, then all the stocks that are based in US that have been following will be in deep trouble. Now, it has been hitting record high after record high after record high. And S&P 500 is now earmarked to hit 6,500 points, 6,600 points. But suddenly, after hitting 6,400 points, the pace and energy suddenly reverse. And the NASDAQ, after hitting an all-time high, and suddenly have a big dip as well. And that caught many retail investors off guard. And all the reasons are now focused on this thing called the AI bubble. So the artificial intelligence stocks are the one that crashed the hardest. So NVIDIA went down 3.5%, Palantir went down 9.4%. AMD went down 5%, ARM went down 5% as well. So all these AI-related stocks suddenly have a dip. So the main reason why some of these artificial intelligence stocks are falling is because the Massachusetts Institute of Technology, a very famous US university, came out with this report and said that 95% of generative AI pilots at companies are failing. And that's very serious, right? So a lot of companies are now experimenting with artificial intelligence, and most of them are failing, and they have got no measurable business return. And only a tiny fraction of artificial intelligence create genuine business value. This bombshell report was published in August 2025, exposed a massive disconnect between the AI hype that we're seeing right now and actual execution. So a lot of people rush to develop AI solutions. Very few companies see tangible benefits. Today, we'll cover all of this. So despite the rush to integrate powerful new models, about only 5% of the AI pilot program, that means their test program, achieve rapid revenue acceleration. Majority fails to deliver anything measurable from a P&L perspective. The research based on 150 interviews with leaders and a survey of 350 employees and analysis of 300 public AI deployments painted a clear divide between successful story and stop projects. So what it's saying is that a lot of companies implement AI right now, 95%, jibabu. Only 5% saw rapid revenue acceleration. Some of the large company pilots and smaller startups are really excelling with generative AI. So said the consultant, startups led by 19 or 20 years old, for example, have seen revenue jumps from $0 to $20 million a year. And that's because they pick up one pain point, execute it well, partner smartly with companies, and use their tools. But this is not the norm. 95% of companies in the dataset generative AI implementation is falling short. The core issue, not the quality of AI models. The model itself is good, meaning that the AI software that is used is very good. But the learning gap between the tools and the organization, while executives often blame regulation or model performance, MIT research points to flawed enterprise integration. Generic tools like ChatGPT excel for individuals because of their flexibility, but they store in organization use since they do not learn or adapt from workflow. So these companies don't adapt it well. Individually, we learn very well. Company-wide doesn't adapt very well, and that's a big problem. And that's also a big illustration that a lot of companies, especially dinosaurs, will find it difficult to adopt because it's filled with people. Their learning skills and learning speed is too slow. Even artificial intelligence insiders are sounding alarm. Are investors overexcited? My opinion is yes. Some investors will lose a lot of money. There'll be periods of irrational exuberance, said Sam, the OpenAI CEO. So what the OpenAI CEO, which is ChatGPT CEO, is now saying is that I think there's a over exuberance in this AI space, right? So that's quite serious, right? So basically, he's warning that there is a tech bubble right now in the artificial intelligence space. So where the money rotating right now in the stock market space? Well, some money are flowing out of technology into utilities, consumer staples, real estate, whatsoever. And now they're a bit more afraid, or a lot more afraid of technology and so on. So now the whole market right now is doing what we call rebalancing. And I actually think a rebalancing is healthy. You should not overweigh yourself into one big sector. But we have got smart ass people saying that, oh, I make so much money in Palantir, I make so much money in Nvidia, I make so much money in Facebook, Google, whatever, right? And that's a huge concentration. And I think concentration risk is always very high. And I think diversification is always the very important thing that as investors we must know. But I'll talk about that later. Now, first of all, we need to say that not all tech companies are crashing. Okay, Intel went up by 6%. SoftBank invested in them in the chips business. It may not that be directly related to artificial intelligence, okay, and so on. So let me remind everybody again: if there is going to be an AI bubble burst, the whole world will kena. The whole world will get it very hard. Just looking at this day itself, after Wall Street goes down, Nikkei, Kospi, Hang Seng Index all went down. So it is very true that our world of stock market are all interconnected. So don't think that US go down, the rest of the market will still be okay. So what is the key takeaway from all this? Well, let me give you my advice for myself. Is number one is all these kind of sectoral shifts, hypes, and all this are just part and parcel of the entire investment for the long term. I would encourage myself, to invest very, very long term. Don't panic sell when there is a sudden bad news that come out like this. MIT says that AI nobody makes money or things like that. Okay, so it is very common that every 3 years on average or 2 years on average nowadays, stock market will suffer a very big volatility. So I think if you hold on to the S&P 500, the NASDAQ, MSCI World Index, Dimensional Fund, globally diversified index, you will make very healthy returns over a long period of time. And I think there'll be pretty nice outsized returns from AI, but you will also accompany with outsized volatility and risk. So if you want outsized return from AI, be prepared that come with outsized risk. They all both comes together. So I would think that as this hype goes up and down, up, go up and down, there'll be huge volatility. But I think that the AI space, just like the dot-com space, okay, will continue to rise and rise in a big way. Will there be a bubble and the bubble burst? Yes, I think it's high chance that will happen. So that is why we must be prepared, okay, for this kind of thing. And as the bubble rise up bigger and bigger, it's perfectly okay to do some rebalancing, right? I've talked about rebalancing many times. And if you want, I can talk about it tonight in a live stream and how rebalancing is being done. But for those people are taking bets individually on stocks, I think that's very dangerous. Okay, I don't think I'm smart enough to do that. That's why I invest in broad-based index. And last is diversify your wealth across many asset classes, right? So put some money into cash, cash assets. They give 2% return, 2.5% return, which is not bad. Okay. CPF OA also has quite a lot of returns. CPF SAMA gives a 4 to 5% return, which is wonderful. Stocks, we talk about it at length. Property, your own house property is wonderful. Bonds, right now, maybe bonds poised for a rise. For the last few months, bonds across the world has been rising pretty significantly. And some of you all may be into business and ventures like myself. That's also a diversification as well. So let me say this with pretty strong level of conviction this will happen. Artificial intelligence will change the world positively, and the change has already started. But not all companies will profit equally. Some will profit a lot, some will profit not so high whatsoever. But individually, apart from investing in this rise, I think we need to update ourselves with artificial intelligence skills quickly. Your company may not catch up quickly, but you yourself must catch up quickly. This is not a fad. This is real. We are already using it, and I show you all many use cases really. I'll try my best in every night in a live stream to show you one artificial intelligence tip that will actually help to enhance your life and maybe some of your skills, okay? And I hope that all these things that I share with you will certainly change your life for the better, okay? Thanks for following us, and I'll see you tonight's live stream. Bye-bye.